Welcome back to the channel. I'm Deanna. This is Market Stalkers. Let's start the video. Today I'm going to talk about an interesting piece of statistics, the one about 90% of traders losing money. Is this really true? Are we all just fooling ourselves? Is it just luck? And if it is just luck, I must be the luckiest person in the world to make this work for me for 12 years now. But I did have 2 intermittent years where I was in a drawdown. So let's say a decade. Making something work for a decade, day in, day out, is it luck? Obviously something doesn't add up. Existence of hedge funds and numerous prop trading companies who all rely on the skill of the traders and quants to outperform the underlying market returns should tell you that all is not as it seems. So is it really true that a lot of traders lose money? Yes. But is it true that 90 or even 95% of all traders lose money? Abso-freaking-lutely not. That number is total nonsense. And I'll tell you why. One reason is that ESMA, which stands for
European Securities and Markets Authority,
forced brokers to be more transparent and to also limit the leverage provided by the brokerages to retail traders. Because back in the day, you could get a 500 to 1 leverage, meaning that for every $1 in your account, you could place a trade worth 500 bucks. So naturally, newbie retail traders were shooting themselves in the face by vastly over-leveraging their positions and trading 5 lots with only like 200 bucks trading capital.
That's crazy.
So to raise awareness of how dangerous this is for the lives of unsuspecting retail punters without really any knowledge about day trading and risk management, ESMA decided to step in and limit the amount of leverage offered. And I fully agreed with that decision. I mean, large leverage in the right hands can be a very powerful tool, but a large leverage for your average Joe off the street with like dollars in their eyes, while on a minimum wage and dreaming of making it big without having to work for it, is complete financial suicide. Another thing that ESMA regulation brought was transparency. Brokers now have to declare how many of their customers lose money. And we're talking about 90%? Let's have a look at these ESMA numbers. Some of the well-known brokers are in here. We have eToro with 65% of losing traders. Then we have DarwinX at 69%. Owanda and FXCM around 77% losing traders. Even the ones all the way at the bottom are no more than 86% of losing traders. But notice with this graph, the dodgier the broker, the higher the number of losing traders. So highly reputable UK and EU-based companies who push the client's trades directly onto the exchange, also known as the non-dealing desk brokers, who don't hold the A and B books, they typically have a much higher numbers of profitable traders than the dodgy ones. I always knew that this 90% losing traders was a complete statistic. I spent a whole week researching this for you guys, so I would really appreciate it if you gave this video a like and a comment down below to help spread the real truth about what it's really like to be a decent day trader.
Anyways,
when the brokers used to run the A and B book brokerage model, if you were someone who only ever tried trading once with 200 bucks and you lost them, you would go down into the statistics as a losing trader. Never mind if you maybe went back on the demo and spent the next few months or a few years honing your skills and then came back with another deposit to try again. Even if you became profitable, do you think the broker got you off that list of the losing traders and onto the list of profitable traders? Nope. Because even if you had 3 months in profit and then 1 month of losing, they would put you back into the losing trader B book. When I was trading back in, I think it was like 2011, 2012 maybe, it was very obvious when the broker would put you back into the B book. Suddenly the spreads weren't as good. Some charts had these like weird spikes that weren't on some other platforms that I was looking at just for charting purposes. Luckily, this doesn't happen anymore because all EU or UK brokers are non-dealing desk as required by ESMA or FCA. The reason why I say ESMA or FCA is because now that we have Brexit here, which was completely eclipsed by COVID-19 outbreak, but it's still alive and kicking. FCA has decided to go against some of the ESMA regulations, particularly pertaining to the size of leverage allowed. So now, as of last year, according to FCA, UK-based brokers can offer leverage on CFDs at 30-1, whereas EU brokers have to abide by ESMA regulations, which only allow 5-1 leverage on crude oil, equities, and other sort of CFD type products. But anyways, back to the subject at hand. Is it true that 95% of traders lose money? No. Is it true that a lot of traders lose? Yes. But the difference between a 5% chance of success versus 35% success rate
is massive.
The problem with new traders is that they want someone to tell them what they want to hear. Yep, everyone can do this. It's easy to go from 0 to making 10 grand a month from your bedroom if you only follow this trend line and sign up to my 100%
forex winning signal.
So they will eat up all of the get-rich-quick schemes from the likes of here in my garage-y types. And most people don't want to hear how bloody tough this job is. I changed my entire identity to be able to do this well, with so many ups and downs that are capable of putting a weaker person probably into a mental institution. I don't know a single profitable trader who won't tell you how brutal and violent this journey really is. So to keep doing this, in order to find your way to consistent profitability, you really need to be quite an odd individual. Stubborn, driven, unemotional, mentally strong, yet lacking ego. And how many people do you know in your own life who have those sorts of traits? Not many. Because most people that will typically go into forex trading are the kinds of people who will type into Google, how do you learn forex for free? And then they go and sign up for various free investor events and seminars where people who speak at those events have paid quite large sums of money to even be able to speak there, but they will only teach you rubbish. And will continue to teach you rubbish about
trend is your friend and RSI.
Anytime you see someone start the seminar with, who wants to make $5,000 a month? Raise your hand. Just run away. Because the here in my garage types only ever focus on perceived results. Look at my Lambo. Look at me, my private jet, and my hot chick. And you can also have all of this if you just pay me only $12,000 for a limited amount of time to spend the next 3 days with me teaching you what a Japanese candlestick is. Good education does have a price, but it should not be $12,000 for 3 days. Another huge obstacle when it comes to this issue of how many traders lose money is that a lot of the newbie traders are completely overcome by emotions when they first start. Most people will never approach day trading from the risk point of view, but instead, if I buy this penny stock and it goes up like 1,000,000%, I'm going to be a millionaire. Oops, penny stock delisted, and with it, all the savings. Poof. Greed is a funny thing. You cannot be greedy as a trader. You cannot have emotions or any attachment to either losing trades or winning trades. So if by nature you are an emotional person, don't do day trading. It will put you into an early grave eventually. Now, whenever a new trader loses a huge chunk of their hard-earned money, then you have fear setting in. Fear is the main reason why some losing traders never go back to trading. They're so scarred by the first experience that they end up having real psychological traumas that they never deal with. And then finally you have regret. If I only invested in Google, if I only invested in Bitcoin, if I only invested in Apple, if only. But the chances are, even if you had invested at the right time, because of the wrong mindset, you wouldn't have been able to hold on to the investment in the first place. So it's completely pointless. Shoulda, woulda, coulda doesn't work in trading. And therefore it's completely useless to keep talking about it. Same thing with hoping. I hope it works out. Well, great. Keep hoping, mate. While I rely on probabilities that I've tested in a simulated environment and then also forward tested in a live environment for a few years, and therefore I'm confident in the probabilities of the setups I'm taking. But you, keep hoping. Another thing to keep in mind when you're looking at these largely anecdotal numbers on how many traders lose money is that even profitable traders will have periods of drawdowns. I know a guy who had an amazing 7 years as a trader and then had a baby, home life got a bit chaotic, he started working from home, and then for the first time ever, he ended up having his first losing year. So is he a losing trader? Does he become a part of the statistics now? Well, according to some of these very poorly designed studies, yes, he's now a losing trader. At the end of the day, you also need to understand that no one really beats the market as such. Most of us who are able to do this for long periods of time, we employ a higher risk-reward ratio on our trades precisely because we don't have to be right all the time. And we know we won't be right all the time. If you take all of my numbers across the last I don't know how many years, you will come up with about 42% accuracy. And yet I'm wildly profitable. How can that be? It's because I don't care if I'm going to be right most of the time. But what I do care about is that when I am right, then my trade goes to at least 2 or 3 times the initial risk on my targets. And that is how I beat the market. It's not to say that I don't have periods of over 80% accuracy, but that's unsustainable over long periods of time. So in a way, even successful traders are basically losing. And this is the part that newbie traders struggle with, the need to be right. So if you can work to beat that part out of you and be okay with losing trades, focusing not on winnings, but instead how much can you lose that day or that week, then you have a very good chance of being in those 30 to 35% of successful traders. That's it for now. Let me know in the comments down below. Do you agree with this statistic? I'd love to hear your views. For more trader issues, click here. For this week's strategy video, click here.